So gold and silver prices just took a tumble. A pretty sharp one, actually. But before anybody panics or starts yelling bubble burst, let's pump the brakes. According to Kitco News, this is not a collapse, it's a reset. Ole Hansen, head of commodity strategy at Saxo Bank, says both gold and silver are no longer overbought but still underowned. Translation: the rally needed a breather, but the reasons behind it have not disappeared. And that means this pullback might just be setting up the next big leg upward. Now, Hansen explained that the risk of a correction had been building for days. You had an extended technical rally, a stronger US dollar, and traders trying to protect profits instead of chasing new highs. Gold tried 3 times to break above $4,380, could not do it, and traders flipped from greed to fear almost overnight. Suddenly, everyone's trying to squeeze through the same narrow exit. Classic market psychology. But this was not about fundamentals breaking down. It was about liquidity. Hansen pointed out that silver has roughly 9 times less liquidity than gold, so when silver runs hot, well, it really runs, but when traders hit the brakes, it falls faster than your uncle's drone on Christmas morning. And here's where this gets interesting for long-term holders like us. After 9 weeks of powerful gains, gold up 31%, silver up 45%, both metals finally cooled off. Hansen called it a much-needed reset to prevent a bubble that would have burst later and hit harder. Silver bounced back near $47.80, and gold found support just above $4,000, and both metals are already showing signs of strength again. If anything, this dip is reminding people that metals are not hype plays, they're value anchors. And if you haven't actually looked into how to actually own them, this is the moment to learn how. That's why I recommend getting your free gold and silver kit from Goldco. It explains in plain English how to use real physical gold and silver to diversify your long-term holdings, not just paper assets that fluctuate with every headline. You'll see why so many people turn to tangible metals to protect their future goals. Now back to Hansen's analysis, he also mentioned something that has not made many headlines yet. A U.S. Section 232 investigation into imports of critical minerals like silver, platinum, and palladium. Depending on the outcome, it could reshape global supply chains and pricing. If the U.S. decides not to impose tariffs, it could ease pressure in London by allowing more U.S.-held metal to flow overseas. But if tariffs are added, that could trap supply in the U.S., intensify scarcity in London, and drive silver prices right back toward or even beyond their recent highs. Basically, the metal markets are still one global hiccup away from another squeeze. But through it all, Saxo Bank remains bullish into 2026. Hansen says traders will eventually pause for thought and realize that the same forces pushing gold and silver higher, debt, inflation, and the demand for hard assets, are still in play. The metals may not be overbought anymore, but they're still underowned. And that's the part most people overlook, because when everyone's rushing into stocks or crypto, gold and silver quietly keep doing what they've done for thousands of years, holding real value even when everything else is shaking. That's why Goldco is giving qualified clients up to 10% back in bonus silver when they open a new account. It's one of the simplest ways to build real diversification into your long-term plan using physical assets, not paper promises. And speaking of long-term perspective, Hansen also mentioned 2 global events worth watching: the Trump-Xi and Trump-Putin meetings. He called them key risk events that could influence short-term sentiment but not the overall direction. Because no matter what's said in those meetings, the fundamentals remain the same. Too much paper money chasing too few real assets. So while some traders panic when markets dip, others see these moments as chances to stack more. And Goldco wants to make that even sweeter. When you open a qualified account, you'll also receive a free Ronald Reagan silver coin. It's a small reminder of what stable value really looks like, especially when the rest of the world feels unstable. The bottom line, corrections like this don't necessarily end a bull market. They could very well recharge it. Gold and silver are still underowned, still undervalued, and still the only forms of money that don't rely on someone else's promise. So next time you see a dip like this, you may not want to panic. Recognize it for what it is: precious metals market catching its breath before the next potential run. Because no matter what the charts do this week or next week, real value never stops shining.